Thanks for clicking. My name is Mark Mitchell. I'm a mortgage broker here in London, Ontario. Elstar released its real estate update for the month of June this morning, showing major reversals across the board. For the fourth month in a row, London's average and median prices continue to reverse, with many Londoners expressing buyer's remorse as the market continues to correct. So what I want to do today is go over London's real estate data for the month of June, discuss some growing trends that we're seeing in the London market as it's changing very quickly into that of a buyer's market. Then we'll take a look at what to look for next. The Bank of Canada raised interest rates last month, and there are growing calls for it to raise interest rates by 75 basis points this month, and we're going to have an update out on that rate announcement next week. If you want to get those updates, make sure you click like and subscribe, but for now, let's get into June's data. On to June's data. The benchmark price of a home in London, the benchmark price being a home which represents the most common set of features, that benchmark price shrunk down to $648,500. And just to give an idea of how much our benchmark price has fallen, in May the benchmark was $703,300. And if we go back to February, it was $749,000. So we've seen a $100,000 price drop in our benchmark price in just a little over 4 months. But we've also seen even further drops in our average price. The average price of a home in London in June was $688,644, down from May's $743,000 in change, and way down from February's all-time peak of $823,000. So that's about a $135,000 drop from our peak that we saw in February. And the median price of a home in London has plummeted as well. The median price, that's where half as many homes were sold for over that price and half as many were sold under that price. The median price of a home in London in June was $650,000. And again, to give you an idea of how far we've come, the median price in February was $777,000, and just last month, the median price was $687,000. But again, close to another $130,000 drop from the peak median price that we saw in February. And it's not just the aggregate price drops that we're seeing. The sales to list price ratio is also dropping substantially. The sales to list price ratio measures how much a home goes for over asking price than the list price. So if a home was listed for $100,000 and it sells for $110,000, the sales to list price ratio is 110. London saw its sales to list price ratio drop down to 102 this month, down from a February high of 125.6 and down from last month's 108.1. So, on average, homes are coming very close to selling for the list price. For a real estate market that has been accustomed to bidding wars for the past few years, this is definitely a major reversal for the London market. And it's very clear to see why we're seeing an end of the bidding wars when we look at the amount of inventory on the market. If we look back to February, London had 0.5 months of inventory, meaning if no other homes were listed, no additional homes came to market, we would run out of inventory in 0.5 months. That number in June was up to 2.5 months. So if no additional homes came to market, it would take 2.5 months for London to run out of inventory. And I think this is having a big impact on our prices and on the lack of bidding wars, as there's just been such a flood of inventory. So, to summarize, the benchmark, average, and median price are all down substantially, down close to $100,000 since their peak in February, due in large part to a major increase, a flood of inventory hitting the London market. And this all lines up with what I've been seeing firsthand and what we've been hearing in the news. CBC had an article last month saying that London had far fewer bidding wars than they once had, due to a flood of inventory hitting the market and there being far less buyers than there were sellers. And we're also seeing a flood of buyer's remorse hit the London market as well. And we've talked about this before on this channel, but we've talked about it in the context mainly of Toronto homes. But we're seeing a lot more in London where lawyers are getting phone calls, getting inquiries from buyers who either paid too much for their properties and now want to find a way out of the deal, or paid too much for their properties and the properties have not appraised for the amount that they paid for them, and now they're worried about getting sued. And why would they get sued? As we've mentioned on this channel multiple times, if you submit an offer and it is accepted and you don't have any financing conditions and you are unable to fulfill your part of that obligation, the courts have consistently held in favor of the sellers in these cases. So, for example, let's say you buy a house for $100,000 and you are unable to fulfill your obligations. And then the seller goes to relist the house and it only sells for $80,000 because during that time frame prices have gone down. The seller can come after you for that $20,000 difference, plus any legal in court costs that are accrued to do so. So in this market, when values are consistently coming down, as we've seen values come down at $50,000 from last month, $100,000 since February. It's extremely important that you have a financing and or an appraisal condition on that offer to purchase, just so you can make sure that your financing is 100%, not 100%, nothing's 100% until you have the keys. That your financing is 99.99% secure before you waive conditions. Because if something happens, if the lender doesn't like the property, if the appraisal doesn't appraise for the price that you paid for it, then you will be on the hook for the difference, and these sellers can sue you if you cannot come up with the difference to pay for that property. And I think it's also important to note that this isn't the last few years where a finance condition, an appraisal condition, was a non-starter with home sellers. There's 2.5 months of inventory out there. So if you're selling your house, if someone is selling their house, they are going to be much more willing to accept an offer with these conditions in place than they were just a few months ago, than they were just a few years ago that we've been seeing when the real estate market was hot. This is cooling down. You can have conditions. You should have conditions. They're only there to protect you in this market that is shifting increasingly downward as time goes on. And with rates only going up, is likely to continue to shift even more so downward. We will obviously have updates out on this channel on London's real estate market and on the Bank of Canada's interest rate policy. If you want to get those updates, make sure you click like and subscribe, and thanks so much for watching.